365, shake my hand. Good afternoon, everybody. Hope you guys are doing well. Shake my hand as usual. And welcome to another video on the 365 Trading Academy channel. And today I want to talk to you guys about Elon Musk buying Twitter. What does it mean for trading, for traders, investors? But more importantly, how to generate a good trade idea. Twitter is not the trade idea we should all be focusing on right now. And I'm hoping in this video you will learn how to read through the lines. So what's the media saying? What's the instinct, right? There's always an instinct. There's a push. Oh no, he's bought it. It went up by 3%. It's time to go buy it right now. And that's the general sentiment I'm starting to pick up in the headlines. You know, a couple of the questions that I received earlier on today. I was stuck in a long, terrible bank queue, and I'm just itching to get back home and quickly record this for you, right? So I really wanted today quickly talk to you guys about a couple of things, right? So like I say, how do we actually build good trade ideas? I'm talking long-term swing trade ideas, short-term trade ideas, and very good investing portfolio life-changing ideas. What is it, what's the piece of information that we use to kind of like put together an idea that would then be the cause of an action of buying Twitter, for example? I just want to be very clear. I'm not against buying Twitter. I've spoken about this a lot in my public Telegram group, where and when to buy Twitter. I forecasted exactly what was going to happen about 20 days ago, not about Elon Musk buying Twitter, but assets that were going to run alongside this news that were not Twitter. And I call that, and it's really maybe key number one before we even get deep into building a trade idea. You should always focus on secondary consequences, right? So Twitter going up today is a primary consequence. Twitter going up today is a logical move. It went up by 3%. But there are secondary consequences, the things that no one focuses on a lot. That's where the real money is. And in this particular video, I'm hoping to kind of like build, a short library with you. We're not going to be together for too long. And I hope you stay throughout the video, like the video, subscribe to the channel, and check out the links down below. A lot of cool things are happening down there specifically. And very importantly, 4 days left, from the date of the release of this video before our full traders course goes off discounts, being 75% off throughout the whole month of April to celebrate another beautiful year as 365 Trading Academy is a registered academy in South Africa. In the next 4 days, that discount will expire, which means pricing will go back to its usual cost, right? So instead of getting the whole traders course at $100, you're going to be back to paying premium price of $400 US. So do check out that link down below. Right, but let's get started, right? So, it's been my theme. The theme this year in the academy is working on the trader's mind. That's really what I want to do by December. Even if it's just for one person, I really want to make sure the impact is more felt, less on the strategy, supply and demand, smart money concepts, trading like the banks, blah, 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 but more on the thinking apparatus of the trader, the controlled emotions, good, clear trading psychology. And it all starts with building an idea inside your brain that you can do this, that you can see through the charts, that you can almost put yourself in a position not to be right all the time, but to become a consistent, profitable trader. Consistent, profitable traders have losses. Consistent, profitable traders have bad days, bad weeks, bad months, but they average out profitably year on year. Okay, and that's the goal as a trader. It's not to be right for the rest of your career, is to be consistently profitable, to make so much more than you lose, to build a life around it. And the first step, in my humble opinion, is building this particular mindset. And we do it together in the channel. If you're new to the channel, read this out loud wherever you are. Look crazy. Look crazy for your future. Don't mind the people next to you. Read it out loud. Vibrational senses speak much more clearer and quicker to your subconscious mind. This is what you're going to say. Every day, in every way, I'm getting better and better as a trader. Every day, in every way, I'm getting better and better as a trader. This is my trader's framework, right? My trader's affirmations are long, right? But this is a big part of it. And because of that, because I'm getting better and better every day, every way, it could be I'm getting better because I'm taking information like this, better because I'm starting to follow more rules, better because I'm learning to do better, right? I'll literally be grateful for every single step. Now, because of that, I am so happy and grateful that money comes to me in increasing frequent quantities on a continuous basis. And by the way, this last part of the intro affirmation is from a guy called Bob Proctor. You know, may his soul rest in peace. He passed on this year, and he was very big on personal development, you know, and one day we'll talk about that kind of stuff. Right, so traders, let's get better and better. And today I want us to focus on creating trading ideas. So rule number one, always, I will break down the Twitter trade. I'll give you guys all this stuff towards the video, but just for now, quickly work with me. Always think about secondary consequences. That's number one. Rule number two, in coming up with good trading, good investing ideas. Rule number two, never, ever get an idea from mainstream media. If it's on the mainstream news, it's too late. If you see it trending on mainstream media, it's absolutely too late. And I'm going to prove it today on the charts. I've done this before many times, especially in my course. I did it with a local example 2 years ago. In South Africa, had one of its local stocks in the JSE, which was a pharmaceutical company, announcing that they found a drug which was going to help patients handle that crazy stage of COVID, where you're on the ventilator and all that kind of stuff. And that particular big announcement went global, seeing the stock go up 15%, I think, on the day on the announcement, and then drop 46% the next 2 weeks, and further drop for almost 3 months after that. And I called it. And the reason why is when it's out on the media, the signal isn't what you think it is. The real people have already made a lot of money. And we're going to investigate this idea here on Twitter, on the Twitter chart. And the nice thing about this is going to be a before move. All right, so we're going to talk about it now, then we're going to see it play out. And we're going to keep coming back to this chart maybe once a week or so forth until I make my point clear. There's a beautiful place to buy Twitter, but it's not where it is right now, right? So number one, always consider secondary consequences. Rule number two, you want to ensure that your trading channel, your trading funnel from the idea to the execution is very flock mentality free. Right, so it's not the ideas you find in the media. In fact, in the media, it's almost like how I trade my Forex, right? So I love the contrarian indicator. I love doing the opposite of what fellow retail traders are doing. Because if I know what retailers are doing, where they are looking, 9 out of 10 times the real money is in the opposite of that move. Same thing with media. If the media is pushing the flock to one direction, I know money is on the other side of the move. So we have to, this kind of like, you know, immediate reserve of fundamentally ensuring ourselves that our accounts are protected because we are not following the media. All right. And number three is my favorite, actually. So number three is one of my favorite rules. And I think this is where you start to remember, I'm an academic. My background is from academia. And so everything starts off with a question. And what I like to do when it comes to the stock market in general, crypto market, definitely, Forex market, a little bit less, but we're talking about Twitter, we're talking about stocks, like trading NASDAQ indices, you know, then you really should be paying attention. Number three, I love doing this a lot. I love asking myself most of the time, what is it that most people, right, believe is true about the markets? Because 9 out of 10 times I'll make money from it. If there's a large group of people who think NASDAQ is going to go up at 3:30, I look for sell setups. If the structure fits, if my rules fit, because I already know there's a customer on the other side of that trade, right? So what is it that most people believe is true? Everybody believes they know what's going to happen next. And you want to group that head mentality together and take the following side. Right, now a little bit more detail now into actual stock market trading, right? I know a lot of the people who actually follow the channel right now are not yet very much, you know, stock trader orientated. But if you join our senior traders program, and you don't pay to join that program, by the way, you simply follow the rules in the course and you build your account and you become a 5-figure trader, right? Without having to oversize your lot size, become a senior trader, and then I sit down with you for weeks on end, working you through the stock market, right? Which is kind of like a big passion of mine, right? So here are a couple of nuggets, just kind of like drop real quick here for those of you who don't really know what to do. There's a book written called Anti-Fragile. It's a brilliant book, and you know, and the main point is poorly built things break. And this is like a perfect thing to think about in all aspects of your life. Anything that's poorly built a relationship, a poorly built trading strategy, a poorly built understanding of self, a poorly built understanding of the market, it's generally meant to break, right? And so these are fragile things. What are fragile things in the stock market? For me, when I'm looking to get into the stock market, and I love being a bear, I love selling things that are just useless, right? Whether it's option trading or actual selling, you know, etc. I also do buy. I love buying too, but I'm just saying I have a specific niche, right? A very specific focus where I'm constantly looking for fragile things. It's almost like the African way for me. You know, I've grown up in fragile economies. I'm so sensitive, I guess, now over years now to actually picking up when an economy is about to fall apart or when a company is about to go bankrupt. But here are a couple of things, fragile things to kind of like look out for in the stock market. Well, number one, companies with too much debt. And remember, this week we're doing earnings report. That's why I pay attention to these things. Companies with too much debt are bound to be fragile. Number two, companies without cash flow. This is going to help you one day. So I hope you remember this video or you're making notes somewhere. Companies, and it's going to, I'm going to link this to Twitter. I'm going to tell you why. You know, the flock mentality Twitter trade is not the trade you should be thinking about right now, right? And I'll tell you what I'm looking at towards the end of the video. And if you want to, you know, up to you if you want to jump in on what I think is about to happen in the markets. Now, without cash flow, very dangerous. Stocks that go up forever, right? They're for forever moon race. And you remember, I think one of my biggest trades I made that public that I closed out about $42,000 US was on a Zoom sell trade, started selling at the height of COVID when everybody thought they knew, right? Rule number three, what is it that most people always assume the most or believe is true about the market? Zoom took over in March 2020. Everybody believed it was going to the moon, and it should have. It really should have. But if you looked at the stock, at the company, and you started to look at how fragile the company was, how they couldn't justify that price, because you can't just justify a share price if you're not earning it, right? Just because something is going up on the charts doesn't mean it's all to go to the moon. Some things go a little bit high so they can fall properly, right? So these are the kind of things, how I generated that 2-year swing idea on Zoom. Okay, so number one, companies with too much debt, without cash flow, that are constantly rising to the moon, or just useless things, right? So poorly made things break. Please don't forget this. Now, when it comes to Twitter, and I really enjoyed, you know, looking at, you know, the actual chart. And I just want to quickly share this with you on the screen, because the chart, or the Twitter chart, is absolutely fascinating, and it brings us back to almost saying looking for a detailed eye, you know, in the markets, right? So this is what you have on Twitter if you're looking at you know, at the daily time frame. I trust you can see it down my screen. By the way, if you're still around and you're enjoying this, don't forget to like and subscribe. Subscribing is really important, and hit that notification bell. Right now, somewhere in here, ladies and gentlemen, towards the end of March, there's a war going on in the world. There's a whole lot of going on. Tesla is doing quite well, but somewhere in here, you know, it became public information that Elon Musk was looking to had bought the largest stake in Twitter. So let's kind of like start with that. So there was that 15% thing. Now, but how did that come about, right? I mean, did it happen overnight? No. All right. So I mean, we won't have time to kind of like go through it in this particular video, but you can always track, you know what the big dogs are doing in trading sometimes, right? So it won't give you a clean portfolio read. It's actually very difficult to navigate. And if anyone wants this information, then unfortunately, you know, you're going to have to let me know so that I can kind of like do a complete tutorial around it, right? And I'm surprised to see all of this is kind of like offline right now. But if you click here on this insider bar, and then you look up the company up here, which will be Twitter, right? And then all of a sudden, you know, your mind has to be alert, because then you can really start to map out who's doing what. It will tell you the CEOs, the executives of this company, how many shares they're buying or selling, when are they buying them, in what quantities, and why. And if you're a supply and demand trader, you understand smart money concepts, all you have to do is come to the chart and start to kind of like read these labels, and you can almost get a a sentiment, an indication of what the executives who are on the ground, who know more than you ever know about their company, are doing. All right, so it's an interesting thing, but you can start to see a whole lot of stuff going on here, on the two things. So I stepped through this and I really tried to read the tape over and above. I kept trying to read the tape, following all these articles, went through who was buying, who was selling, when they were selling, right? Insider trading. And the list is long, but if you have time or your passion for the markets, you'll get down to this. But I want to quickly just bring a couple of things to your attention. Right. So when Elon Musk announced that, or when it was announced that he's now officially the largest shareholder, right? So what happened then, and I'm sure it's been all over the media, so I don't want to waste too much time, but basically immediately the Twitter board invited him to come to the board, right? Because when somebody buys and is now the largest, shareholder in your company, they've got a lot of control and influence. But the Twitter board is trying to be smart, kind of like control and curtail Elon Musk, right? And you want to have a leash, on such a wild, very powerful, rich dog sometimes, right? So to speak, they offered him a seat at the board. I'm pretty sure if we follow the headlines correctly, at some point in time, Elon was actually going to agree, all right, and actually sit through this whole thing. But it came with some terms and conditions. And terms or conditions where if you do join the board, you can't own more than 14.9% or basically 15% of the company, all right? And then that might have triggered, but I don't think that's when it got triggered. I think this was always part of his plan, in my humble opinion. But he realized that if I join the board, then I can't own them more than 15%, which then triggered, the real intention, which was I might as well just buy the whole thing. I might just own the whole thing. And then they went through a process of trying to initiate poison pill, which is a complicated process of diluting shares, giving out, more shares out, so as to almost protect the company from rogue outsider takeover, or to buy the company enough time to negotiate for the most, the best they can get out of the deal. Remember, the executive board isn't there just to say no to yes to deals, but is actually there to ensure legally that they make decisions in the best interest of the shareholders, right? So that's a very big, important part. Like, you have to make decisions that fully represent the best interest of the shareholders. And I think, that's kind of like something to be mindful of here. So long story short, they've come back now and they've agreed to kind of like, his pricing. I think they've added like just an extra $1 billion, but, I think all is well, like on the particular front. Now, if we look at the chart, ladies and gentlemen, which is where I want to point your attention to, after giving you that quick summary. All right, so folks, we've got like basically like Twitter on the daily time frame. So there's the announcement right there. Okay, what's going on, right? Elon Musk goes, markets gap. There's a big gap, right? And we'll talk about gaps in a second. But what I found interesting, and this is the next big thing you're doing in generating your idea, and I don't want to sound like, a high school teacher, but your next big question, after voiding all the things, after knowing your niche, after trying to find, what's fragile and what's not, your biggest question always has to be why. Why is the so-called richest man in the world buying Twitter? Why should I buy Twitter if that's the big trade idea? So my why was none of those things. Like I said, I don't care about buying Twitter right now. I'm not motivated. If you look at my charts, if you're part of my financial notes in the Wealth in 3 Years program, before it became the Wealth in 3 Years program, in 2020, I said, let's sell Zoom, let's sell, all these big things, and let's buy Twitter. The trade idea or the investing idea in 2020 was I was buying for the election. Donald Trump in 2020, November, election was coming, and I knew Twitter was going to go up because of how that man, uses Twitter. So that was a trade idea back then in 2020. So I bought 17 shares here. You can see all my long-term buys. And then eventually that bet came to an end. Naturally, sometime in November, he loses the election and things start to recorrect, right, at the end of 2020, right? So Twitter ran its race for me a long time ago, right? So my why was not about actually why does Elon Musk want to buy Twitter or why should I buy Twitter. sorry for, there we go. Right, so these are the buys I was referring to here. My why was specifically to do with, why did price stop where it did? That's my why. Well, I mean, I see the hoo-ha on the media, and then markets gap up and stop right there, dead on. Right, so that's when I came to this, started rolling out the tape, trying to find the real reason why price stopped. And remember, this is a stock, and so same for assets, same for crypto. The price matters. So I was trying to figure out what happened in the stock around this range. I'm literally trying to teach you my process, right? I'm trying to work back between $52.35, right? This yellow range here is between $52.35 and $55.69. Why? Why did price gap and stop there? Why didn't price go all the way to a weekly supply? Why would price be stopped by a daily supply? Today in our public free Telegram group, somebody asked me a very important question. He said, well, it felt like you're saying, I don't get the warning, Leroy. I can only see Twitter price going up from moving forward. And that's not my thesis, right? My thesis is be careful of buying right now because price could go against you. And it still links to why did markets stop there between this range? So I was reviewing the tape, going through the buys and sells, compiling the data, trying to figure stuff out until I got to an interesting thing, a parallel with what happened in price here. Now, if you've done my course, you'll know the pillars of supply and demand is price is everything, price is in everything, price is fractal in the way it prices in everything. What does price is everything mean? We do our module 1. You hear me say it over and over again. Everything you need to know about a price movement is in the chart. If you really know how to read it, we use the lens of smart money concepts. Price is everything means everything I need to know is here. Prices in everything means the future moves are generally predicated about markets understanding to the relationship of supply and demand now, and pricing in what's going on now into the future. All right, so you'll see with my next video when I talk about market awareness, market conditions, the Fed, rate hike for the 3rd of May. I'm already looking at what markets have priced in is going to happen and a potential Fed rug pull. That video is going to drop tomorrow, on the next 48 hours, and you won't know about it if you don't subscribe. So please make sure you subscribe. Now, and the last thing is price is fractal. Price is fractal means there's fractality, across price. If you follow smart money concepts, you really read supply and demand clearly through a process of multiple time frame analysis, we have grown to realize there's a lot of fractality in price, right? So what happens on higher time frames, you can find the exact same patterns and versions of movement as you go down. So you can scale a big move from a small time frame positionality, which begs the question, if price is fractal, why didn't this upward movement shoot all the way to my weekly supply? Why did it get stopped by the daily supply? Could it just be structure honoring structure, daily supply pushing down from daily demand? Where did price explode from? It wasn't really at a significant demand. In fact, the gap up has created now a significant demand. Before that, markets were not in any shape or form near a significant demand. So those are the kind of things that I started to look into. And then the answer to my why led me to here. Price is everything. I started to realize, if I was paying attention to Twitter last year, which I wasn't, all right, but if I was paying attention to Twitter last year, there was a supply that was created. We call this a PCP, potential continuation pattern, very common in stock and crypto. Right, this consolidation phase is a specific type of supply going down or demand when going up, which comes with specific rules. And one of those rules are the fragility of that area of value. And I noticed that, there was a beautiful imbalance and markets strongly rallied back into that supply and then dropped because that's not enough for me. It's not enough for me. I wanted to figure out why. As I was reviewing the tape, looking at the obsession of price around this area of value, I noticed that the specific drop we're talking about happened on the 29th of November, 2021. If you review the tape long enough, you will bump into this beautiful headline. The actual CEO of Twitter, or the co-founder of Twitter, who helped create Twitter in 2006, actually resigned as its chief CEO on the 29th of November. Now imagine you run a big public company. Imagine this public company has millions and millions and millions of shares. In fact, to be exact, Twitter has 768 million shares, or at least the amount of stocks available. And that CEO of that company who helped create the company, you would think it's his long-term work. You would think it's going to be there forever. Imagine if Elon Musk resigned from Tesla right now. Right? Imagine if he just said, you know what, I've decided to do something else with my life. My calling is blah, blah, blah. I'm now resigning. What do you think that's going to mean? What the real Tesla, the cults, the Elon Musk cult, they're going to be heartbroken. They're going to think Tesla is nothing without Elon Musk. A lot of people believe that. A lot of people believe that because Elon Musk is buying Twitter, Twitter is going to become everything bright and beautiful, everything free speech, because it's going to privatize it, right? There's a cult around these things, a cult mentality, at least, right? So on the 29th of November, the actual CEO of Twitter stepped down. Of course, there's going to be a lot of selling. There's going to be a lot of shock selling, emotional selling, cash out selling, right? And this is happening literally at the back of a downtrend. But look at structure. Tell me what's random. What came first? The CEO resigning, or supply being created first, and that supply was created on the 16th of November. Between the 16th of November, if you've done my module 1, you will notice that there was a clean imbalance of price up until the 29th of November, and when markets came back to this range between $52.35 and $55.69, then price rallied very big, see a big red candle to touch the supply when the CEO resigns and markets fell. It is now the same supply, the same zone, literally, that Elon Musk announces that he's the largest stakeholder. First, he was the largest. Markets gap up and get stopped there into that same zone. Here's another thing about this zone. If you'll allow me to geek out for one more time, and I'm looking at charts here. Elon Musk offer for $43 billion US. The first offer was $43 billion US, which was $6 billion US premium, right? Because at the time of the offer, whatever the share price was trading at, right? I can't remember then. He was, he was offering 43 at the time. The actual company share price was not what the companies were, was about $37 billion. So versus the $37 billion of what total shares could have really amounted for, he offered 43, which was $6 billion more. And we've learned today that he actually bought it for 44. All right, so he offered $1 billion extra. But how do we get these calculations? He's offering $54.20, okay? $54.20 per share. So he's really offering a premium thing. He's like, look, man, let me show you. When he offered this big amount, right, to take over, price was somewhere down here at about $30-something per share. He then said, I'm going to buy the company for $54.20. So I'm going to quickly put a horizontal array line here. I'm going to make this horizontal line a little bit thicker so we can see this, together at the same time. I'm going to make the horizontal array line white, right? So it's going to be different from these red lines that I drew earlier on, all right? And actually, we can remove these red lines because these red lines, we're just talking to the nature of that zone. So this white line here, we're going to then price it to $54.20, which was the offer and the executed deal sale now, right? Now that we've learned that he now owns it, right? And there we go. Look at where $52.20 is. It's still inside that zone, the obsession zone, the zone where the CEO steps down in November 21, the zone where a supply is first created in November 16. What comes first? Did the Twitter fall because the CE dropped on the 29th of November, or did Twitter fall at the creation of a supply and the selling and media announcement of the CEO stepping down was an effect of the cause, right? Supply and demand will cause things to move, and now prices come back. Now, when price gapped up, where did price stop? It literally stopped at $54.20. Now, ladies and gentlemen, I don't want to waste too much of your time in this particular video. The safe place to buy Twitter is down here. I'm not even going to beg you. It's up to you. This channel does not offer financial advice. You know, we're only here for education purposes. If you feel the need to buy up there and you make money, good for you, right? But I'm not buying this thing based on media rates, number one. Number two, I'm not buying up there or up here because I understand supply and demand. And I understand that market inefficiencies hate gaps. And that at some point in time, this gap is going to be filled with your money. Those of you rushing for the buy, I will be waiting to buy there because that's where the true demand is. If at all we believe this thing is going to kind of like go up, right, in the long run, right? A couple of good things are looking good for Twitter. The supply has been tested twice now. We're starting any shareholders who failed to get filled and failed to sell when the actual CEO announced he was stepping down in November 2021 are finally being filled now. You are buying where people have been waiting to sell. People who have been in it longer than you. People with a whole lot to push up to you. You are just simply buying on the high of the news, and it's dangerous. It's absolutely dangerous. Now, why is Elon Musk buying Twitter, right? So now I just want to quickly unpack for the last 5 minutes or 10 minutes of this video. Why is he actually buying Twitter? Well, he said a couple of things. He said, well, number one, we need a platform that maintains free speech. Well, let's kind of look at a couple of things here. I've got a couple of tabs open. I'm just digging through the numbers of Twitter, and I noticed this. I mean, I didn't notice it today, by the way. It's been around for a while. The PE ratio of Twitter is a dash. It's blank. Okay, well, let's break this thing down. PE ratio blank is a big problem. What that means all the time, if you look at a stock and you check out its PE ratio and you see that the PE ratio is blank, well, that means that company is making no money. Twitter is not profitable in the slightest. It's making $0. All right, it has no PE ratio. This is absolutely important, right? So I just want to quickly show it to you again, and then we'll quickly move on, right? PE ratio 0, all right? Volume is not too bad, all right? We can give it that. Market cap just under 40 billion US dollars, all right? The day range, that particular big range that we spoke about earlier on, you know, on our chart, that's been the day range for a year, all right? And year range, this thing can move between $31 per share all the way to about 72, 73, right? That's actually quite a big deal. Now let's break down this PE ratio, right, and what that means and why I think it's absolutely important to kind of like bear at the back of our minds as to Elon Musk's why, and then we're going to match that with my why. All right, so what's the answer to my why, whether I'm in or not, in line with how to keep generating good long-term trade ideas. So we've got a PE ratio that is 0, but maybe for those of you on the channel who don't actually know what this is, right, a PE ratio, and maybe I can just quickly type it in for you right here. If you just give me 2 seconds to actually find my pen on the whiteboard. Which screen is it? Oh, there it is. Sorry. Right. So a PE ratio, ladies and gentlemen, for those of you who don't know, is something that you always find on stocks, right? And how you calculate this is you basically look at the share price, right, divided by earnings per share. And if it's 0, it means, you know, the company isn't making money. All right, so that's the basic math of how we get, you know, our PE ratio, price to earnings. PE stands for price to earnings. And if it's 0, it's crazy. Now, something that did not make media, or maybe did, it just depends where you look. But if you review the tape, right, on institutional sites, you see everything. The Twitter board actually hired Goldman Sachs, right, to actually assess. And I love Goldman Sachs. If you follow me long enough, you'll know I think they're a good standard, in terms of institutional play. Anyway, Goldman Sachs literally looked at Elon Musk's offer, the company's health, and to see if really is it a good idea to sell Twitter at $54.20 per share. And do you know what they say? By the way, they thought Twitter was actually worth somewhere along the lines of $30-something per share. All right, and that's a big ouch, but a very important ouch. I can quickly drag you, ladies and gentlemen, to the charts again to see what this means. Remember, price is everything. Price is everything. So I want to see the price. I want to see how this fits into the price according to Goldman Sachs analysis. If they're saying, take this man's money, he's offering you $54.20. That's a big deal. Take it right now, because we feel like, if we're being honest, I'm going to flip to the weekly time frame right now. We feel like Twitter is actually worth far less than that right now. We think Twitter is technically worth about $30-something US, per share. So I'm just going to draw a rectangle right there, just something like that. Right, and why am I looking at that? As a supply and demand trader, I'm seeing a big imbalance on the weekly time frame. Maybe just to make it clearer for everybody, let me just remove that highlight, number one. Number two, make this a little bit bigger for you so you can see. Right, so I'm seeing, the first big imbalance, and I'm sure it's based on this Twitter debacle, the first time Elon Musk was announcing things. I'm just going to draw a white line across. And if I'm not mistaken, you can double check me, just Google Goldman Sachs assessment of Twitter. There we go. So this is the only demand on the chart that is very valid on a weekly, chart analysis, number one, which means even where I'm telling you that a good place to buy on the day, you might just get a short-term bounce, and price might actually first have to go lower to make contact with Twitter at this price of about $35 per stock. And only time will tell. And I won't forget. So I will one day, 2 weeks from now, 2 months from now, I don't know when, I will come back and make a video, not to say I told you so, but to impress upon you the importance of being thorough with price, to impress upon you the importance of thinking through your ideas. Goldman Sachs says, take this man's money. Because, legally as a board, you have to do what is in the best interest of all shareholders. Taking Elon Musk's money is in the best interest of everyone who's invested in Twitter, because there is no better deal out there. They never will, because he's offering you far much more than what this company is worth. Right. So that was a big moment, right, for the Twitter board, which I think is what actually pushed them into accepting that particular deal. All right. So terrible PE ratio, not making money, a professional institution coming into play and saying, okay, look, well, as far as we can tell, you're actually not worth what he's offering. So I really suggest you should do it. Now, what are secondary consequences? I spoke about this at the beginning of the video, and I'd love to end with it. Whenever something is pushed onto the media, I scratch my mind to figure out what are the secondary consequences. Where is the most money going to be? And this is what I thought I should share with you. If the whole move for Elon Musk is about the lack of free speech on Twitter, the whole move is about coming against centralization of information, censorship, and all that kind of stuff, then you have to think about secondary consequences. Yes, we've mapped out the Twitter trade, but many things could happen. What does this mean for Twitter's biggest competitor? Who's that? Meta, Facebook. What are they doing? Because if Elon Musk is saying the problem with social media companies is one of them, Twitter, I don't know, and he's actually made a lot of shots at Mark Zuckerberg. He even said, if I own Twitter, I won't control it tightly the way Mark does, right? So what does this mean for competitors? Where do the competitors sit in this whole thing? Are we going to start to see, capitalism forces these big companies to compete all the time? And when they compete all the time, the idea, poorly executed in capitalism most of the time, but the idea is they will produce a better product while they compete with each other for consumers. So what's the unintended consequence for Facebook? There's something you have to start to consider. That's a big secondary consequence, right? So I'm thinking, one, I'm looking at Meta. Meta has had a tough time, right? Since the first financial quarter, I think I covered that quite well, so I won't really waste your time on Facebook. But Facebook really struggled. It's absolutely struggled. I mean, this was one stock, one of those big mega cap stocks that took a beating, a thorough beating, and is still struggling, right? Dwindling down as part of a long-term market crash, right? This is kind of like a good place to see the heartbeat of the market. As soon as markets get into a golden Fibonacci area, a good place on the governing time frame where price is met with a beautiful, beautiful demand, what does Facebook do? Bearish engulfing pattern, right? If there was never another sign of, oh my goodness gracious, what the hell is going to happen? This is it. I actually don't even know what to do. I don't know if I should dollar cost average into this right now. And the answer is I won't right now, because I know I'm going to get much more, dollar, risk to reward dollar or bang for my dollar, sorry, in the crypto markets right now. So right now I'm good with this particular stock, but I'm just saying, look at the stock. It's hella cheap. It's going to have to face the fact that whatever Elon Musk is going to do, he's got a big following, right? About 80-something million people voted on the poll that Twitter needed to change. Before he made the call to go full on and buy Twitter, he ran a big poll, and a lot of people agreed with him that Twitter is actually suffering, at least from the lack of free speech, that the censorship needs to stop. So what does this mean for this big platform? All right, watch out for that, because those are the secondary consequences that you can start to look out for and ride by. Right now, we're going to have to look into a lot of things, and maybe we can discuss this in another video. But if Meta doesn't find a chair, a sitting, a floor, and it's not just that, right? Facebook, Twitter, all part of this big thing called NASDAQ 100. Right, so they're the ones who make the big NASDAQ 100, and you have to see this for yourself. I'm starting to feel like I'm developing a list, sometimes, right? And it's just because I'm talking quite fast, and I apologize. Right, so look at this. This is a NASDAQ 100, creating a PCP pattern, potential continuation pattern to the downside. We've spoken about this many times. We spoke about how crazy in January already. I said, imagine if I stand to you in front of you in a war room and say, no matter what, NASDAQ has to come all the way down here. How crazy would that be? And a lot of people agreed it was crazy. Look at where price is going. And then I say, well, we've got a lot of buy orders from the COVID period all the way down there. Again, people say I was crazy. I got it on the 365 Trading Academy Facebook page. I screenshotted a lot of people who told me I was crazy. I said the same thing about Bitcoin, by the way. They said I was crazy, right? Wanting an asset to go to the moon because you've been programmed that the only way you can make money is if you're buying, is a terrible way to trade. We have to assess what the charts are telling us and the direction of price. Because at the end of the day, what matters is if you're geared and you're tuned, sensitive to what markets are saying, you will realize that although we can find short-term day trades going up, which is fine, the long-term trend for swing to positional trades, which govern the flow and creation of trends, govern the direction of price. And as long as we had a big bearish up there on the monthly time frame on NASDAQ, and I've got a PCP consolidation to the sideways going down, you can see that these things like Facebook, Meta, all these things are dragging price down. So how long do you think your Twitter buys will hold? How long? How long do you think they will hold? Yes, there's going to come a time where this needs to get retested, which means in the next month or two, we need to see NASDAQ go up again a little bit just to claim, a retouch of a new supply zone, right? If you can read this as supply. But I guarantee you, we're still to see more pain in the markets. There is going to be a Fed hike rate and a Fed rug pull on the 3rd of May. We are still to see more pain in the stock market, right? So secondary consequences help me protect my money, because then I'm starting to think, right, okay, fine, this is where all the money is going to be concentrated. Is there something, my goodness, I feel like I'm developing a list in this video. Is there something in the markets that's going to come through and sweep up all those, impatient traders. The secondary, idea that I was able to generate was simply from what Elon Musk said. He said, look, man, maybe we can create a payment system for Twitter. And that's what these guys do. When you privatize an asset, the next thing to do is to make the asset profitable, right? Profitable. You want profitability. I'm not gonna spend. Imagine spending $44 billion to do the same thing Twitter has been doing, which is to not be profitable. You want it to be profitable. So as to create a payment system, and he said it's going to be done via Dogecoin or something like that, right? So Dogecoin is Dogecoin, sure, but it signals something much more clearly for crypto, right? We know that he's very big on Bitcoin and Dogecoin, right? And this is now the new owner of Twitter, who might actually in the very near future create a payment system for that. So what did I do? Thinking around secondary consequences, if you come here to the public Telegram group of the 365 traders, right? And this is right. So this once again is a 365 traders, public Telegram group, right? And I'm talking about, well, so let's go all the way down. We spoke about it a bit today in the morning. Shout out, man. Shout out, Mr. Mbas. I'm doing the video now. Let's see. For example, video. Sorry guys, I apologize. Sometime in April, I told you guys the example, or at least I gave you guys my thoughts and perspectives on what exactly would come across as a secondary consequence, right? So because this man has just bought this company, it's going to be privatized, going to have to be profitable. On the 6th of April, I said, look, I don't like to promote meme coins, but my philosophy is, number one, money is money. Number two, be smart about your money. Elon Musk now owns a massive stake on Twitter, so he still owned it at that time. This man, I promise you, will be using that platform to get Dogecoin running for the kicks of it, right? So not financial advice, but allocate carefully what you want to give to Doge. In terms of trading chart, it looks like it's ready to run. And this is what Dogecoin looked like on the there we go, there on the 6th of April. Earlier on, so about 20 days ago, I was really thinking about secondary consequences. Doge is going to do well, Bitcoin is going to do well, because Elon Musk is the poster child of those things, right? Like he's known to move the markets a little bit, specifically in the crypto space, especially Doge and sometimes Bitcoin. But he said he was going to create a payment system where Dogecoin could be used. So obviously, there was a clear runner. And Dogecoin, unlike Twitter, was looking at a much more healthier place to buy. Dogecoin yesterday gave 26% in returns, shot up by 26% yesterday. Twitter today, at the news of Elon Musk buying Twitter today, right? Dogecoin today did 26%. Twitter went up 3%. But ladies and gentlemen, and I'm so scared to find out what's going on here. This is 365 Kenya. I haven't caught up with the messages. And this is a 365 private students group, and I can see they're waiting for me there. I'll sit through that. Look at Twitter today. Look at Twitter from the time I started filming this video. All right, where's your 3% now? Where's your 3% now? When markets arrive at a supply, it does not matter what mainstream media is telling you. Price will fall. Right, and you could take the gamble here and hope that markets fill this gap, and the first bull traders, cowboy traders, are going to start buying there. But again, I assure you, in the long term, you'll thank me later, the best place to buy Twitter is all the way down there. The best place to take a trade is very much away from the media, away from media frenzy. Right, ladies and gentlemen, now in conclusion of this video and in conclusion on this topic of taking secondary trades, I would then like to then conclude with what I'm thinking. The Dogecoin trade is gone. Oh, we're in it. We invested, we're making a bit of money. Don't forget to take profits, and all that beautiful stuff. The next thing that got me really thinking in my notes here was the fact that if the main problem, the main reason, the motive, here's why. Remember, we're speaking about why. Why am I buying this thing? Well, there's a problem with free speech. and because I want to fix free speech, because free speech is important. There are other consequences. Dodge will go up, Bitcoin will go up. You'll use it to probably, you'll do whatever he wants with it, but it's going to be much more carefully done, I assume. Number one. Number two, the Elon Musk cult, which is over 56 million people of his followers, will be taking that platform very seriously. But if the problem that Elon Musk is trying to cure is free speech, it got me thinking, are there any projects out there, right? We've already spoken about how we have to see how Meta, Facebook, blah, 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 is going to respond to this new crisis, this new competitor, and what it's trying to do in the space. So we'll be looking at that carefully. But I wanted to find out about alternatives. Now, I want to say it is not the only one. What I'm about to present to you is not the only one out there. There are actually quite a couple. This is the one I've chosen for myself, for my portfolio. What I'm about to say to you is not financial advice. It's just how I want to move in the market. And I thought I'd share that with you. So if the issue is free speech and decentralization of social media, my mind went to blockchain, DeFi, pretty much the future. And I found an interesting crypto coin, and the program, right? What it is associated with comes very close to what Elon Musk is trying to do with Twitter. And as a secondary consequence, I cannot imagine how all these things will not benefit out of what Twitter is going to do, right? So the one I want to talk to you guys about is called Decentralized Social Blockchain, right? And its tick symbol is DESO, and we're going to look at the chart real quick. But basically, this is currently being used by the co-founder of Reddit, the CEO of Coinbase, backed by Coinbase Ventures. I mean, hello, it's a non-startup. What is it? It's a social media platform, but on the blockchain, highly decentralized, right? So therefore, the whole free speech problem slightly goes away. Instead of giving out likes, you can give tips. So it is an actual profitable place to be. Unlike Twitter, your profile and your posts, your tweets, your identity are all on the chain. That means, listen to this, because it's on the chain, it means it can easily scale to over 200 apps built on DeFi right now, right? I'm not talking about something that's going to happen in the future. I'm talking about a project that already exists with an investable token. As far as I know, I bought a little bit today and a little bit last night on Coinbase. It didn't seem like I could buy anywhere else. I couldn't find a link to MetaMask. If anyone knows where else you can buy DSO, please holler at me in the comments down below. I'd like to spread myself across. But right now, the only place I could buy it was in Coinbase. Right, now let's continue at why I like this. This is me thinking about secondary consequences. This is me wondering, well, if the poster child of crypto, which is Elon Musk, is now big on free speech to a point where he's willing to spend 44 billion for a company that's worth 30-something billion, just so you can create it, privatize it, remove the board, and then do the free speech thing. It has me thinking about what would this mean for other social media networks involved in the same process outside of Facebook as a juggernaut, right? What are these other small projects trying to do? Now, is how much has the decentralized social blockchain made? Well, it's already done about 1.4 billion US dollars in transaction, right? So that's not too bad, right? It's a small project, but it's kind of like done quite well. Has a fixed supply. You know me and my obsessions with supply, because if you've got an unlimited supply, then go away. Fixed supply of 10.8 million coins. So I definitely wanna get my foot in. But there's this good rule in this particular token. No individual, no Elon Musk or anyone in the world can show up and own more than 5% of the total supply. All right, so that's actually a nice thing. There's actually kind of like a Shiba Inu billionaire right now who bought so early and so well that if he sells right now, he will literally crash the entire thing, right? So he actually has to wait for price to pump before he can sell, because if he removes what he's put in, the whole thing falls apart, right? So this is a good rule built into this thing. Now, DESO, I don't know. I'm just going to call it the whole thing. The decentralized social chain block is a new type of blockchain, like I've explained, designed to power Web 3.0. Right, a decentralized social network. So its inception was about probably 2019. I could be wrong. And basically the whole point of creating the decentralized social blockchain in 2019 was to solve the problems currently created with social media's platforms that are extremely centralized, like Twitter. Secondary consequences, right? So it's a good thing. And then maybe, to end this beautiful video, let's quickly have a look at the chart. I already told you that I've invested. It is not, financial advice. I just like the project. It makes sense to me. And it is not the only blockchain project, by the way, that is currently, going to be involved in this kind of thing. It's not the project that Elon Musk is going to run to. I don't know where he's going to run. But when I'm looking at price right now, I'm going to go first, governor, top-down analysis, supply and demand levels. This thing is still trying to find its footing, right? And this right now is a beautiful PCP pattern to the downside. Problem number one. But problem number two, if we're lucky, we could get market inefficiencies to fill this week and then start tracking on. I'm a long-term holder, so it really doesn't bother me what this built-in structure is slowly but surely starting to look like, right? And Coinbase does not, or at least this particular chart I'm looking at, doesn't give me the full picture of the history of price. All right, none of them will, unfortunately, but I do know it did start around about 2019. Right, on the weekly time frame, you can see right now a token is trading about $32 a token. So we still got a nice point, slightly under $100 US, all-time high, really ranging around almost just under $200 US, which for me is a perfect run, right? If you can just get me there, I'll be square, type of situation. I don't have to hold you forever, but if you can get me back to your all-time high at least, and this is all going to be influenced by the crypto winter, the bear market, etc., etc. But you can see, I'm looking at this, interesting supply at the $40 US mark. And like I said, I started buying crazily yesterday and a little bit again today in the morning, targeting if there's any liquidity grabs that were done here, looking to hold, a current daily demand. And by the way, price is allowed to go a little bit lower. All right, so let's close some tabs that I had opened out for you. Here's the decentralized, social policy part. You can see more details on it if you want. Right there in front of you on CoinMarketCap, if that's something that you're absolutely interested in. Price is up today, interesting, right? While Twitter is falling, right? This is kind of like slightly up, but could mean absolutely nothing. And I just love it. I just love it. The Elon Musk just bought Twitter and enhanced Twitter features. This project could go more than parabolic, right? So we've got a whole lot of people very, very bullish on this whole thing. And like I said, I already got in yesterday, etc. If you go onto their actual website, deso.blog, then you can actually see how far they've come with all the statistics, the numbers, the volume. It's not the only project, but I'm very happy. I'm very happy, putting some money in. And this is just me emphasizing, think secondary all the time to generate good trading results, right? So only 2 million coins are currently out in circulation. Like I said, there's 10.8 million coins in total cap, right? This is really good. This is like early days, really, really early days, right? Really, really early days. Look at how many have been minted, right? It's very, very very, very early days. I'm thoroughly happy with the project. Like, really love the integration across a whole lot of DeFi networks. Worth looking into. I like it. I will be, throwing a little bit of money into it. I'm giving this out right now on 365 channel, so it won't be part of our Wealthy in 3 Years financial notes dropping in the first week of May. And with that, maybe let me end the video with this whole thing. There are two big things happening at 365. The main one is this, the trader's course. This is really what you want. right? This is where you want to consolidate your information on how to trade, why we trade the way we trade. The doors of these things are about to open, module 2 and module 4. Module 1 and module 2 build fundamental supply and demand basics. By fundamental, I don't mean we create fundamental traders. I'm talking about really understanding the nuts and cracks of institutional trading as a retail trader, understanding how institutions move, how smart money moves, so that you can better position your retail trader account, your small account there. So it's an entire lecture series of the different types of supply and demands, the chart levels, how I get by. And then module 3 looks at scaling that as a day trader. Module 4 speaks more to trading psychology. Number 2 is the Wealth in 3 Years program, where it's strictly just investing. So what I do is I put together an incredible financial note of what I will be doing with my money, where I'm investing, all these projects that I find through research, chart work, etc. And then I send them out for education purposes. And if you do want to act on it, that is now completely up to you. But that's what the Wealth in 3 Years program. Both programs are running at a 75% discount, expiring within the next 4 days, and then everything goes back to normal pricing. Discount for the month of April is what we do every year to celebrate another year as 365 Trading Academy. It's been beautiful breaking this stuff down with you. If you're still here and you like the video, share the video, share the love, share the information. Make sure you don't have people in your lives, right, are looking like a deer in front of headlights, right, about to make an incredible, and by the way, they could buy and make a whole lot of money, but for me, it is not a sustainable way of trading. I honestly don't think they'll make a lot of money. I honestly, why would? I mean, it'll be fun to keep track of this next week. 365, shake my hand, hope you enjoyed the video, and see you tomorrow. Tomorrow I'll be talking about the current market conditions. You have to see that. I'm talking about the rug pull. I'm talking about the future of the stock market. I'm talking about more red days to come and where we can maximize and benefit from that. Love you all. Shake my hand one more time. Last chance. Please don't forget to like the video. And with that, leave you guys with a goodbye, and I'll see you next time. Peace.